Broadcom hitting a new record intraday high today following strong earnings, also a 10-for-1 stock split.
Hey, maybe it could even push out Tesla and the Mag 7.
You should be putting yet more money into a Broadcom, into an Nvidia, into some other AI plays?
This hyper-growth phase in the semis will probably go on for years.
Broadcom is pretty much giving investors what they wanted.
Something big is happening at Broadcom. They're about to do a 10-for-1 stock split, and the stock has rocketed up by over 50% this year alone. And whenever I see that kind of growth, there's really only one question left to ask. Could Broadcom be the next Nvidia stock? Or are their best days already behind them? Your time is valuable, so let's get right into it. First things first, I'm not here to keep you hostage, so here's everything I'm going to talk about in this video. I'll cover what Broadcom actually does and how they compete with Nvidia, their biggest competitive advantages versus other semiconductor companies. I'll go through their latest earnings call and their upcoming 10-for-1 stock split, and of course whether I think that Broadcom stock is a good investment as a result, even after shooting up by around 50% so far this year. Alright, whether or not you've heard of Broadcom before, it's worth understanding the science behind this stock, because you're probably already holding it. Broadcom is currently the 8th biggest holding in the S&P 500, right above Eli Lilly and Warren Buffett's Berkshire Hathaway. And it's the 5th biggest company in the NASDAQ 100, putting it above companies like Meta Platforms, Tesla, and Netflix. That also makes Broadcom the 2nd largest AI chip company in the world, right behind Nvidia. And that's not by accident. According to Broadcom's CEO, Hock Tan, more than 99.5% of all internet traffic touches at least one Broadcom chip.
Jim, I got to tell you, 99.5% of every bit of data that flows in the internet will cross at least one or more Broadcom chip.
The reason that Broadcom dominates the world's network infrastructure is because that's almost all they focus on. Broadcom only has two business segments: Semiconductor Solutions, which accounts for about 58% of their revenue, and Infrastructure Software, which makes up the other 42%. So let's start there. Broadcom's Semiconductor Solutions focus on wireless networking, network interface cards, high-performance switches, and custom application-specific integrated circuits, or ASICs. It's important for investors to understand that Broadcom's ASICs are fundamentally different from Nvidia's GPUs. At a high level, ASICs actually have better performance per dollar, but at the cost of being much less general purpose. After all, they're application specific, so they have a very narrow set of workloads that they can work on. That's why Broadcom really only sells ASICs for AI workloads to hyperscalers that can deploy enough of them to justify the costs of designing and making them in the first place. Otherwise, it would be better to go with an off-the-shelf general purpose chip, like a CPU or a GPU. Here's a quick clip of Bernstein's senior semiconductor analyst, Stacy Raskin, explaining why Broadcom might be an even better stock to buy now than AMD, which makes GPUs that directly compete with Nvidia.
A lot of people, whenever there's a boom in something or just a well-performing stock, love to say, well, if you miss the big one, go with the next in line. And I'm not sure that ever really works out, to be honest. But that's the line on AMD. Why are they not the obvious one to bet on if you don't have the stomach for Nvidia?
Well, I mean, they are and they aren't, right? So I understand the need for a second source, and they are the clear second source, at least on GPUs. Most of the, at least maybe the more credible second source may not even be AMD, maybe a player like Broadcom,
exactly,
or some of the other like ASIC players who are doing chip design for the hyperscalers who are doing their own chips. That actually may be the more credible and realistic second source over time rather than a second GPU vendor.
Your Nvidia price target is 130, which isn't even the 52-week high. For Broadcom, you're at 1950. So how, what would you describe the opportunities there as still massive as well?
I think they're big for Broadcom. I actually really like Broadcom. So it has what I call the second best AI story in the space. And remember, in semiconductors, there's only really two companies that are seeing material upside from AI. It's Nvidia and Broadcom. That's about it. Everybody else, AMD and quite a few others, as good as they're doing, their core businesses have been weak enough where the AI has not been helpful. With Broadcom, their core business is also quite weak. They play in some of those legacy networking areas, but the AI business has been strong enough to completely bridge over it. So they haven't had to take their numbers down. We've seen numbers going up. Their current AI guidance for the year is actually very, very conservative. They've also got software businesses and other things that I think can drive upside going forward, and the stock is very cheap.
So, Broadcom's portfolio of data center chips is second only to Nvidia's, and there's this added benefit of diversification, since holding Nvidia stock and Broadcom stock means getting exposure to two different kinds of AI accelerators, GPUs and ASICs. Broadcom helped design every generation of Google's tensor processing units, or TPUs, which Google uses to train and run large AI models like Gemini. That includes the 6th generation TPU that Google announced a few months ago at Google I/O, and the next generation 3nm TPUs that are currently in development for Google and for Meta platforms. In fact, estimates suggest that Google and Meta could drive over $9 billion in AI chip revenues for Broadcom this year alone. That would be almost a 2.5x increase from last year and about 50% more than AMD expects in AI chip revenues over that same timeframe. Broadcom also designs high-performance top-of-rack switches for AI data centers, and the custom Jericho 3 AI ASICs inside them can be stitched together to support massive GPU clusters. But it doesn't stop there. Broadcom was actually the first company to launch a combo chip for mobile phones back in 2007 by combining Wi-Fi, Bluetooth, and FM radio components on one chip that went into the very first iPhones. And in 2019, Broadcom finished the industry's first end-to-end 5G switching portfolio, which ended up moving almost all radio and fixed-line traffic onto Ethernet. That's why almost all internet traffic today, over 60% of which is mobile, touches at least one Broadcom chip. Broadcom is still the main supplier of Apple's 5G and Wi-Fi chips today, and Apple was still Broadcom's largest customer last year, representing about 20% of their total revenues in 2023. And instead of moving to their own in-house chips, like they did with Intel's processors a few years ago, Apple actually doubled down on their partnership with Broadcom. Even the iPhone 17, which is set to release sometime in 2025, is expected to use Broadcom's chips. So, most of Broadcom's semiconductor solutions are aimed at enterprises with wired or wireless Ethernet-based infrastructures, which is the current industry standard. And hyperscalers like Amazon Web Services, Microsoft Azure, and Google Cloud all have their own lines of AI chips built for Ethernet-based racks. That's why Nvidia is coming out with their own line of Spectrum-X Ethernet networking solutions to capture more market share for data center networking. So, should Broadcom be worried about Nvidia? Well, Vivek Arya from Bank of America asked this exact question on their latest earnings call, and Broadcom CEO Hock Tan gave a really good answer. In a nutshell, Broadcom doesn't even think about competing with Nvidia when it comes to accelerators. That's where Nvidia is very good, and Broadcom knows where they stand with respect to that. But when Google or Microsoft or Amazon want a custom chip to handle specific AI workloads at a large enough scale, Broadcom can help design one for their stack. But those ASICs don't compete with Nvidia's GPUs. If anything, they compete with AMD's and Intel's CPUs. Now on networking, maybe that's different. Broadcom is very deep in Ethernet, and they've been doing Ethernet networking for over 25 years, so AI networking is a very natural extension for them. But even on the networking side, Broadcom acknowledges that GPUs are the AI compute engine of choice, and data centers want a tightly integrated end-to-end computing platform. So if anything, Broadcom's networking solutions supplement and hopefully complement those GPUs with customers who are building bigger and bigger GPU clusters. So Broadcom doesn't really compete with Nvidia as much as support and enable the same markets, but from a very different angle. Even Nvidia's Spectrum-X Ethernet solutions might end up being used for very specific kinds of AI compute clusters, while Broadcom's networking solutions would connect everything else, like they already do. Remember, most internet traffic today still has nothing to do with generative AI. The other 42% of Broadcom's revenue comes from their infrastructure software segment. In 2018, they acquired CA Technologies, which is an IT management software company that provides tools for automation, project planning, training and test data management, and a lot more. In 2019, Broadcom acquired Symantec, a cybersecurity platform for desktops, laptops, and servers for businesses of all sizes. Symantec software focuses on things like application controls, firewalls, and exploit prevention systems to protect endpoint devices from hackers, viruses, and malware. And of course, in November of 2023, Broadcom acquired VMware for a whopping $69 billion. VMware lets companies set up virtual machines to do things like create isolated environments to process sensitive data, launch a backup machine when a main machine goes down, or pool resources from multiple servers to run compute-intensive workloads that need more than one computer. The common theme around all of these software acquisitions is that they help large-scale data centers operate, expand, and secure their machines, networks, and the devices that connect to them. VMware has around a 60% market share in the virtualization market, and Symantec has over a 75% share of the market for Windows anti-malware applications today. So these are both great software acquisitions for Broadcom. Which is kind of funny because Broadcom was actually acquired itself back in 2015 by a company called AVGO Technologies for $37 billion, the largest merger between two semiconductor companies in history. AVGO Technologies makes wireless networking components and custom chips for everything from smartphones to enterprise networking gear as well. That's why Broadcom stock's ticker symbol is AVGO. Speaking of which, now that we understand the company at a high level, let's take a look at their latest earnings results and current competitive advantages to see if Broadcom stock is worth buying after this massive run-up and their 10-for-1 stock split. Broadcom posted record revenues of $12.5 billion for the quarter, which is up a whopping 43% year over year. And their gross profits look almost just as good, coming in at $7.83 billion, a year-over-year increase of 28%. That gives Broadcom gross margins north of 61%, largely due to their dominant position in data center networking and their smart software acquisitions. For example, this was the first full quarter of contribution from VMware, which more than doubled Broadcom's overall infrastructure software revenues quarter over quarter. Even if you don't include VMware, Broadcom's revenues are still up 12% year over year. But the real star of the show is Broadcom's AI revenue, which is up an insane 280% year over year to $3.1 billion for the quarter, which more than offsets Broadcom's declining revenues from their non-AI semiconductor sales to enterprises and telecommunication companies. By the way, Broadcom is currently only guiding for $11 billion in AI revenues this year, a number that they would beat even if their AI revenues don't grow at all for the rest of the year. Let me point out two big patterns that I'm seeing in Broadcom's earnings. First, the weakness in their cyclical core business of non-AI networking and semiconductor sales is being more than offset by triple-digit growth in AI revenues. If that sounds familiar, that's because we saw this exact same thing play out with Nvidia back in 2022, when their core consumer GPU sales collapsed, but their AI revenues took off like a rocket. I expect the same pivot towards AI to happen at Broadcom, but maybe not to the same extreme levels as Nvidia. But still, we could see their AI revenues grow from 10% of their overall revenues to something like 30% over the next few quarters. And second, unlike most other chip companies, Broadcom has a diversified portfolio of hardware and software solutions. Not only does that raise their margins, but it gives them a lot of optionality when it comes to expanding into new markets or making up for weaknesses in existing ones, like we saw them do this past quarter. The global artificial intelligence market is expected to 12x in size over the next 8 years, which is a compound annual growth rate of almost 37%. That's split between hardware, software, and services, which makes Broadcom a great company to consider for capturing all of that growth. Now that I've gone over what Broadcom actually does, their biggest competitive advantages compared to other semiconductor companies, and the high-level overview of their most recent earnings results, there's really only one thing left to cover. Is Broadcom one of the best stocks to buy now that it's already up by over 50% since the start of the year? And if you feel I've earned it, consider hitting the like button and subscribing to the channel. That really helps me out and it lets me know to put out more deep dives like this. Thanks, and with that out of the way, let's talk about Broadcom stock, starting with its 10-for-1 split. In my opinion, Broadcom could materially gain from this stock split, which takes place on Friday, July 12th. That means on Monday, July 15th, Broadcom's shareholders will have 10 times the shares, each worth 1/10 the price. So in theory, stock splits shouldn't matter. But in reality, studies show companies that announce stock splits tend to rise an average of 25% over the next year versus about 12% for the S&P 500. One big reason for that outperformance is that many brokerages outside the US still don't offer fractional shares. So Broadcom's share price going from $1,700 to $170 lowers the barrier of entry tenfold for a lot of investors. Another thing that Broadcom stock split might enable is their inclusion into the Dow Jones Industrial Average, which is a price-weighted index, not market cap, but stock price. The Dow Jones tracks 30 large-cap companies that account for a significant portion of U.S. economic activity. It includes companies like Microsoft, Salesforce, Apple, Amazon, and Intel. Broadcom is a very natural fit for this index. But the stock split isn't the only thing that Broadcom's investors should look forward to. Broadcom's dividend has been steadily increasing every quarter for the last 12 years, and the stock currently sits at over a 1% yield. While I don't particularly care about dividends myself, Broadcom has a policy of distributing half of its previous year's free cash flow to shareholders as dividends and saving the other half for acquisitions and stock buybacks. In fact, Broadcom spent around $7 billion on share buybacks last year alone. So, considering the size of their dividends, their buybacks, and how good their acquisitions tend to be, I think that Broadcom is one of the best tech stocks to buy now and hold over the long term. Broadcom may not be another Nvidia stock, but honestly, that's a good thing too, because it's exposed to all the growth that AI has to offer in a different way than Nvidia, at least for now. ASICs versus GPUs, Ethernet versus InfiniBand, and software versus hardware for AI infrastructure at massive scales. So holding Broadcom and Nvidia is a great way to have your cake and eat it too, which is why it's so important to understand the science behind the stocks. And if you want to see why I bought Nvidia stock before its 10-for-1 split, check out this video next. Or if you want to see what stocks I'm watching right now, then this video is for you. Either way, thanks for watching, and until next time, this is Ticker Symbol U. My name is Alex, reminding you that the best investment you can make is in you.